Development is Wednesday, March 4th. We have a quorum. Members, today we'll hear an update from Deed about UI from Jim Hegman and Evan Rowe, as well as hear a bill from our very own Senator Draheim, which would be Senate File number 3649. So to get started, can we have Mr. Hegman and Mr. Rowe approach the testifier's table? And once you get settled, please proceed with the presentation by stating your name for the record when it's your turn to present. And thank you for coming back to the committee to help answer our questions. And a quick question, would you prefer that we ask questions as they come up or hold them until the end?
As they come up. As they come up, Mr. Chair, is just fine by us.
As they come up? Okay, thank you so very much, and we sincerely appreciate that. So we will now turn to you all. So, Mr. Rowe, are you starting us off?
Yeah, very briefly, Mr. Chair. If I may.
Introduce yourself for the record and go forward.
Absolutely. So my name is Evan Rowe. I am Deputy Commissioner of the Department of Employment and Economic Development. Great to be back with you today. I'm mostly just here to introduce UI Program Director Jim Hegman, who will be walking through the presentation that you should all have in your packets. This is largely a lot of content that we previously shared with the 2025 Unemployment Insurance Advisory Council, and I think we'd heard from some members that the walkthrough that Director Hegman had done would be a useful grounding exercise for members of this committee and might be an opportunity for folks to ask questions about the program. So with that, I will turn it over to Director Hegman.
Thank you, Deputy Commissioner Mr. Rowe. Now we're going to Jim Hegman. Please identify yourself for the record, and I understand that you're the Unemployment Insurance Director from D. So you identify yourself for the record and go forward with the presentation.
Thank you, Mr. Chair, members. My name is Jim Hegman. I'm the Unemployment Insurance Program Director. Thank you for the time today. As Deputy Commissioner Rowe mentioned, this is largely a presentation that we do for the UI Advisory Council in order to walk into the subject of unemployment insurance. We've recognized over the years that this is what we do all day, every day, but not everyone gets that opportunity. So,
Mr. Hegman, will you do me a quick favor?
Yeah.
Will you talk directly into the mic? It's kind of hard to hear you, and we want to make sure that we get a chance to hear every great nugget that you are presenting for the committee.
Thank you, Mr. Chair. So this is an overview that we do for the UI Advisory Council. It's a quick walkthrough of how the program operates and covers a number of areas that we don't ordinarily take the time to talk about. So with that, I will walk in. We plan to talk about some program basics, a little bit about our technology projects, quick overview of program performance, and some operations highlights. So the basics of the program is this is actually from the statute. The public good is promoted by providing workers who are unemployed through no fault of their own temporary partial wage replacement to assist the unemployed worker to become reemployed. So eligibility, it's an eligibility-based program, and that means something very specific. We pay folks that are laid off and some that are discharged and quit as well. So generally the theory is that the person did not cause their own unemployment, though there are exceptions to that. It's a temporary program, so up to 26 weeks under normal circumstances. Partial wage replacement, about half of what the individual is making when they were working full-time per week, up to a maximum currently of $914. And the purpose of the program is to become reemployed. So you must be able to work, available for work, actively seeking work, or in training. It's an old program. We just turned 90 last year, started during the Great Depression, and it's oddly structured, kind of in a current mindset. Back in the 1930s, it was more difficult for the federal government to compel states to take action on something. So there's a different structure for unemployment insurance. What the federal government did was introduced a tax on employers, and that tax was set at a higher rate if a state where the employer was located operated an unemployment insurance program in conformity and compliance with the federal requirements. Then the employers in that state got a major credit against the federal unemployment tax. That's called a FUTA credit. So the normal tax would be done at $420 per worker, basically. And with the full credit, it goes down to $42. So this was a structure to encourage states to operate their unemployment insurance program in conformity and compliance with the federal requirements. Conformity and compliance are words that we use, mean something very particular. Conformity means our law conforms with the federal law. And then compliance means we operate the program in compliance with the federal direction, which we usually get from USDOL. The reason that this matters, a lot of reasons why it matters, obviously, but one of them is that when you all would propose a change to the unemployment insurance program, we'll first review that change to ensure that, best that we can tell, it will pass through conformity and compliance. If it does not, then the provision would be severed, and that's not something we would want to subject anyone to. Benefits are funded, so the payment of benefits is funded through a fairly complicated taxing system. There's two types of employers. The first I will talk about are what we call experience-rated employers. Sometimes we'll call them tax-paying employers, and that's as opposed to reimbursing employers. So tax-paying employers pay a tax on the first $44,000 that they pay each worker during a calendar year. The tax is based on a base tax. Currently, it's 0.4%, and also what's called an experience rating, and that's a rate between 0% and 8.9%. This is a ratio that's calculated by looking at the last 4 years of benefit charges, payments that we've made to their ex-employees, and comparing that to the taxable wages paid over the same 4 years, and that results in a ratio. The ratio is going to be capped at 8.9%, though in theory it can be much higher than that. So it's possible to be, so it'll be 4% on the base tax rate and about 8.9% is the maximum, though it can be 0 on the experience rating. There's another tax that goes into place in the event that the trust fund is at a lower level, and that's called the additional assessment. That's not actually a tax against the taxable wages, it's a tax on the tax, so to speak. So right now that's at 14%. And I'm just going to check my notes so I get this right. An average employer in the state, if they were to pay $44,000 in wages to a worker, would pay about $657 in unemployment tax through the course, and that'll be in 26. The second sort of employer that we have is called a reimbursing employer. Reimbursing employers are going to be governmental entities. Nonprofits can elect to be reimbursing employers, and the tribal entities are all reimbursing employers as well. Unlike the tax-paying employer, it's less of an insurance model for them, and they reimburse the UI trust fund on a quarterly basis for the benefits paid to their workers in the prior quarter. All the monies we take in to the trust fund are held in a special account in the U.S. Treasury. It's the Minnesota Unemployment Insurance Trust Fund account in the U.S. Treasury. It can only be withdrawn to pay unemployment benefits. Those funds are not accessible to a state for any other purpose but for the payment of unemployment benefits, and that's part of the conformity and compliance rules. Generally speaking, the way the tax structure works with experience rates and the base tax is that eventually it will catch up. So tax rates will increase as if unemployment benefit payments go up in order to equal out, but it does take time to do that. The money goes into a trust fund. Sometimes we get questions about why do we have a trust fund and what does it do? The first thing that's important to know about unemployment insurance benefit funding is it's not forward funded. So we carry a trust fund largely for cash flow and in order to absorb impacts on the economy if there's a larger slowdown in the economy and we end up paying out more in benefits. So we can't really anticipate, we don't know for sure how much unemployment there's going to be in the future. We carry enough money in the trust fund in order to cover a period of time until the tax structure can start to respond to whatever is happening in the economy. There's a few elements that we have to do. So there's cash flow issue. We make payments daily, but reimbursements and tax collections are done quarterly. So there's just a span of time between when we pay and when we can collect receipts. And then, excuse me, the amount of benefits varies significantly throughout the year. Obviously, we're in the wintertime. We pay out a lot more per week in the winter due to seasonality, but it turns out that we collect less in taxes and reimbursements in the wintertime because of the way that the taxable wage structure works. So we will receive the largest amount of money from taxes in April, May, and June, and we receive the lowest amount in January, February, and March, which is when we pay out the largest amount, so that needs to be absorbed. Experience rate calculations typically take at least 18 months to respond. but they can take longer than that if there's a slow increase in payout. So during a normal recession, if you looked at the Great Recession, the amount of benefits we were paying out went up very quickly, and then taxable wages dropped at the same time, and experience rates responded very, very quickly to that. If there's a slow increase in benefit payment, then the experience rates do not move as quickly, and it's a little slower for the fund to respond. Trust fund balance is maintained to avoid borrowing. Sometimes we get asked, what would be a solvent level in the trust fund? And that's sort of a fraught question. USDOL has a rough calculation, but honestly, through the course of the pandemic, because it got challenged so much, those numbers probably don't make as much sense as they did prior to the pandemic. Dense slide, I apologize. So part of what we normally see in the event that there's a slowdown in the economy is that it would be normal for states to borrow money. That's not unusual. It feels unusual. It feels like a big deal. It is actually just baked into the federal-state relationship. So in the event that a state starts to run out of money in its trust fund, there's a fairly mechanical process that we use that we just request what's called a line of credit. The line of credit is immediately granted, and then we can keep paying benefits, and that doesn't slow down. Once we get into a larger payout period, there's mechanisms in both the state law, and if we go into borrowing, there's a mechanism in the federal law that allows us to recover from that. So the first thing is the state law. The tax rates will increase, the additional assessment goes up, the base tax rate goes up, and we will start to recover the funds that were paid out. If we go into borrowing mode and it persists for a long time, then what will happen is slowly employers in the state will lose what's called the FUTA credit. So rather than $42 per employee, it might go up to $84, and then from 84 it might go up to 168 or something like that, and just keep ratcheting up until the borrowed amount is paid for. During the pandemic, Minnesota and a lot of states ended up borrowing money from the federal government in order to continue to pay unemployment benefits. That process resulted in a pretty significant amount that we had borrowed during that time. And as a result, the legislature made a decision to buy down that part of the debt, which I think was about $2.3 billion. A little bit more, to buy down the amount owed to the federal government and try to restore the trust fund to the balance, roughly $1.5 billion that existed before the beginning of the pandemic. That replenishment effort brought the fund back to where it was before the pandemic started. It also ensured that the tax elements that would have kicked in following the pandemic did not kick in at that time. So it brought it back to a previous standard, but it wasn't necessarily intended to anticipate all future payouts and benefit structure. So it got us back to where we were before the pandemic. It's worth noting that prior to the pandemic and through the pandemic, the experience rates, which is the strongest factor for replenishing the trust fund, had been historically low. And so we kind of continued the low experience rate following or through the pandemic and coming out of the pandemic. And that explains a little bit of why the trust fund is sort of where it's at now, which is a bit low. So after the pandemic, or in 2022, we were looking at the data, and as we sometimes say, it was the first pandemic for us as well. So we were trying to watch the trend and hopeful that we could kind of discern something. 2022 in the unemployment insurance program looked a lot like 2019. So we thought, okay, well, fine, we're maybe returning to prior to the pandemic. It turns out that 2022 looks like an aberration, and then it started to move, and we became more active in 23, 24, and again in 25. So again, not a pattern that we were familiar with, and if you look at the information about how the trust fund recovers, it's designed to recover from a recession, not necessarily a pandemic. It's just different. Currently, the base tax and additional assessment are both came on for 2025, and they're on again for 26. We're seeing experience rates climb up, but quite slowly, so a little higher this year than they were last year. The base tax is at 0.4%, which is the maximum it can be without unless we're borrowing. And the additional assessment ticked up to 14%. Again, that's 14% of the tax owed from where it was at last year. It appears that the structure that the legislature created back during the Great Recession is actually working, but a little slowly in order to recover the funds. So we're moving in the right direction, just not as quickly as we did following the Great Recession. Administrative funding for the unemployment insurance program comes primarily from the federal government. So that FUTA tax, the federal unemployment tax that I mentioned before, that actually pays all of our salaries, pays for the unemployment insurance programs in all the state. So it's very specific funding, so it's structured so it can't be redirected very easily. It pays for 6 or 7 very specific things and only certain activities inside of it. Our funding, our administrative funding, is what we call workload related. So the busier the program gets, the more administrative funding we get. But it's always designed to be kind of at a lights on level. So it's not, we're not getting additional funding most of the time. It is worth noting that funding is always, because it's workload related, it is always going to lag behind workload. So the typical pattern would be the workload comes up because a recession or some other event occurs, and maybe 6 months or so afterwards, we might start getting more administrative funding. So funding lags behind workload. You can't hire people until the funding's in place. It takes a while to train people, and then you've got them trained. When it all works out, it's typically about a year in order to go from an event occurring until we can actually respond with staffing. So that's the challenge of all unemployment insurance programs in Minnesota and all other states. The demand for the work that we need to do is going to take place before we could staff around it at what I call a commensurate level. So in response to that, what we use is a lot of self-service, a lot of data, a lot of technology to ensure that in the event something occurs, if there's a downturn, we can respond to it directly and immediately and quickly and not have to wait for more staffing. This is something we happen to be quite good at in Minnesota, and if you saw what happened in the other states during the pandemic, they struggled to keep up, and some of the states still have backlogs. We were able to stay on top of our backlogs, clear them, and move forward throughout the pandemic with not much of a staffing change. And this is by design. This is what we work hard to do because we want to make sure we're there for Minnesotans when we're most needed. On the outside, we always say it's the unemployment insurance program. It is, in fact, multiple programs. We just try to make it look like it's only one program. So there's the regular unemployment insurance program, the state program. There's also what's called a combined wage program. Wages from multiple states can be combined together. That's actually a separate program. It works just like UI, but it's a separate program. So we can draw on wages from other states if people worked in more than one state. There's a federal unemployment compensation program. That's actually not our program. That's a federal program. We operate it on behalf of the U.S. government, and that's for federal workers. We would have turned that on a little bit more this last fall when there was a shutdown. Then there's unemployment compensation for ex-military folks. That's also not our program. And then it's gone now, but the trade readjustment allowance, which is like an extended benefits program. So those are always active. And then there's some periodically active programs, something called additional benefits. Extended benefits is another program. Typically there's a federal extension if we're in a downturn, something called disaster unemployment benefits in the event of a flooding is the typical thing in Minnesota, or tornadoes. And then sometimes there's supplemental benefits that augment unemployment benefits. I won't read the whole list here to you, but all of the different programs we run actually interact with one another. So when you do all the combinations together and all the bookkeeping we have to do in the background and the accounting, it comes out to about 100 programs at any one time that we're tracking. And the programs all stay with us for usually about 15 years. So we will be tracking data for all these programs and all the combinations of them for about 15 years. And that makes the UI program very complicated in the kind of in the back end. The part that we hope that you don't ever have to deal with. Program varies a lot in size. So the 25,000, we haven't been that low for a while, but it used to be in October we would hit about 25,000 active accounts, applicant accounts. And then prior to the pandemic, our peak level was 250,000, which was January of 2010. We hit about 600,000 in, I believe, May of 2020 during the pandemic. We can process between 2 and 10 million weeks of benefits in a year. About 12 million wage records are processed. We issue a couple 100,000 determinations. Between 15 and 25,000 full due process hearings are held in a year. We will do reemployment sessions for about 30,000 to, I think we're headed towards 60,000 folks per year. We do audits of employers, about 1,400 of those a year, about 600,000 phone calls, and we produce a lot of paper and a lot of data. So the next section is sort of how the program responds to the economy and sort of what that looks like, because it's not super familiar to everyone. Ultimately, how big the program is depends on what the economy and in Minnesota what the weather is doing. Unlike a lot of programs, there is no cap to unemployment insurance. The program gets as big as the program needs to be based on what's happening in the economy, and we saw that during the pandemic and also the Great Recession. So it can grow or shrink without any policy changes whatsoever, just with the economy. The things that affect us most in Minnesota, we are the most seasonal state in the country, so we will see a swing between about 35,000 active claims and close to 100,000 between October and January of any year. There are other cycles that we will see in the side of the program. I think recently there were changes in interest rate levels, and so when that happens, we'll see more folks in the finance industry applying for benefits because there's a little bit of a slowdown there. So changes in the economy are just about always reflected, though indirectly, in unemployment insurance data. So if there's layoffs in a community or something else is happening, it starts to get reflected in the data immediately. So if there's a downturn, it gets picked up pretty quickly. We also will see things like major disasters, flooding, tornadoes. We'll do that, and obviously the pandemic did as well. A little bit of nerd work here, but I'm going to tell you how we calculate your fiscal notes. And this isn't so you can do it yourself, just so you know what we're doing. So there's really just three elements that are involved in it. We need to know essentially how many folks are unemployed or likely to get benefits. We need to know what ratio of those folks are actually going to get benefits, and then what the average weekly wage is for them. Those are the three elements we need to know. Some of them are not very predictable, some are fairly predictable. So we look at the amount of unemployment benefits we'll be paying. It's going to be based on the not seasonally adjusted unemployment rate. That's almost never in the news. What you usually see is the seasonally adjusted rate. The seasonally adjusted rate flattens the rate significantly. So especially in the winter months in Minnesota, it flattens the rate down and it looks less significant. I'm going to show you the seasonal rate in just a second. So that varies throughout the year. The recipiency is just the ratio of those people that are unemployed that are getting unemployment benefits. On average in Minnesota, that's about 60%. It varies by industry and occupation. And then the average weekly wage, wage drives the average weekly unemployment benefit amount. Right now, the average in Minnesota is about $570 per week in unemployment benefits. And essentially, if a law change is proposed, we do the calculations based on those numbers. And if we have more detailed information, we use those. This graph is something you don't see very often. This is the not seasonally adjusted count of unemployed workers for 18 through 25. So 2018 through 25. I'm skipping the pandemic because honestly it makes a huge spike and it pushes all the data down below. You'll notice that there's a gap that's in the 2025 data. That's because BLS was closed during the month of October. What you can see here at the bottom of it is 2022. That's a seasonally adjusted count. And you can see 2022 was quite low compared to 18 and 19. And 22 was also the year when we were trying to do the estimates for the replenishment. And then we moved up after that, and then you can see the 23, 24, and 25 are moving up a little bit. 25's been a tad busier in terms of the not seasonally adjusted rates. The shape is pretty normal here. You'll see a spike in the wintertime. That's on either end of the graph. And then there's a spike in the center of it as well. That's a little bit bigger now because of a change to what we call the between terms provision. So that's unemployment benefits for those folks that work in the educational industry. This is also the not seasonally adjusted unemployment rate, but this is the national numbers here. And you can see that the shape, if I go kind of back and forth, the general shape is pretty close to the same. So the general shape is the same. Minnesota's, just a little bit more seasonal than the nation as a whole. But the general pattern's been the same. So the not seasonally adjusted unemployment levels have been going up for the nation as a whole as well. This then is the number of people, so this is getting towards a recipiency number. The first one is the number of folks unemployed. This is the number of people that are requesting benefits, and you can see it's quite volatile. I left 2020 and 2021 in here to show sort of how that can spike through, but it's a little bit hard to see the variability with that. So in this graph, we took that out, and you can see that it follows a fairly normal seasonal pattern. There's always a little bump around July 1st, and that's because some employers shut down around July 1st, and so we get a little bump in unemployment benefits in that time. And then you can see the policy change passing through for the between terms provision. Do kind of a quick overview of our technology. It's a big deal in the work that we do. This, I suppose, cute graphic is to illustrate an element of the technology. What folks see is our external website, and they'll say, oh, well, you've got a website. It's actually a web application, and it is amongst, generally speaking in states, the unemployment insurance applications are amongst the more complicated IT activities in states. So it is very big and very complicated beneath it, and it's hard to get it right. We've been pretty good at getting it right, but it's pretty challenging to do. So the part you can see is not most of the work that goes on underneath that. The challenge with unemployment insurance technology generally is the feast or famine kind of cycle that we have. Funding drop, if you go into a recessionary period, yes, funding goes up, but you use the funding on staff, so you kind of can't get ahead of the cycle. What Minnesota's managed to do is try to leverage those periods of time to make sure that we're constantly reinvesting in our technology to improve our scalability so that we can respond when things happen. We got a pretty good cycle going now, which we're pleased with. So we've bought down most of the old legacy costs that we have, and we're moving forward in slow, continuous updates to the system. What we're aiming for is no big bangs. What we're aiming for is simplicity where we can get it, and modernization in slow increments as we go. What we want to do is always be very successful in the work that we do. We want to make sure that we're spending the resources as responsibly as we can, and not having any failures that affect anyone. So we'll do 20 or 30 builds in a year, and for the most part, no one will even know we're doing those. Significant build of new code. In 2020, we mostly focused on implementing the pandemic programs. We were the first state to implement all of them within basically weeks of getting the information on it. In 2021, still in the middle of the pandemic, we migrated our entire system over to the cloud. In 2022, shortly after the end of the pandemic, we updated our entire presentation layer, adding 3 more languages inside of the application process, so it's available in English, Hmong, Somali, and Spanish. We enhanced our disaster recovery, security improvements, and infrastructure enhancements in 23, added some framework structure in 24, and began working on some of the work that we are doing to support our friends in paid leave. 25, I don't remember how many projects we've had so far in 25, a lot. The major ones that you might be familiar with or might have seen is that we introduced some updates inside of the UI structure with help and funding from our friends at Paid Leave to essentially clone the UI tax system so that it could be used by paid leave. That's a lot of the work that we did on that side. The goal there was to make the impact for employers as low as possible. So if employers were familiar with doing UI in Minnesota, then they would be able to meet their paid leave requirements without much of a change. And in fact, it's mostly integrated. We did have to build a separate taxing system because you can't intermix UI and paid leave taxes. So they're essentially cloned. What the paid leave program inherited from that is a pretty sturdy UI tax system that has been audited numerous times, has passed those audits, and is reliable for what it's doing. So that was, I think, a good investment and probably the right way to go for employers. As we've implemented these things, we've had a chance to talk to employers, and particularly to third-party administrators like ADP and these other large administrators that submit wage detail on behalf of their clients. And so we'd be in those conference calls, and ADP would say, okay, so what's going to change for paid leave? And we'd say, nothing. Okay, but what's going to change? Nothing's going to change. So we can just do the same thing we're doing? Yes, you can do the same thing you were doing. That reduces complexity for these large third-party administrators and allows them to meet the requirements of the paid leave program with as little change as possible. So that was a lot of what we were trying to achieve through this, is to implement this at as low of an impact as possible and consistency and integrity as we could for our friends in paid leave. We've also been spending a fair amount of time talking with those folks directly affected by the paid leave changes. Helping on our end of it. This is just some notes on the audit. I won't read the whole thing to you, but we get audited every year because these projects are large, and the audits have come back. We're very pleased to say that they come back very positively, and that Barry Dunn, who's been doing our audits for us, has been very positive in the approach that we're taking. Again, our goal here, sometimes what we say is our goal is to be boring. We want to be as close to a utility as we possibly can be. It sometimes surprises people to find that unemployment insurance is actually large in Minnesota. So we are a large state for unemployment insurance because of our seasonality. We're the most seasonal state in the country. Maine is pretty close, but it's a much smaller state than we are. We are able to do something other states can't do. We don't actually run out of work. We've always got plenty to do, but we can clear our queues about Thursday. So tomorrow afternoon, we will clear our queues. There's always other work to do, but that means that we've caught up. We're waiting for people to get us more information so we can keep going. That's very unusual. That's how we stay timely on things. And then our on-demand capacity is very good. For program performance, because of the federal-state relationship, a lot of this is dictated by how the feds essentially oversee unemployment insurance programs. All unemployment insurance programs are submitting scores of reports every month, quarter, year, week. There's also a ton of integrity controls and other things that are being reviewed at all times. So we're being audited for timeliness, quality, internal controls, and integrity almost continuously in unemployment insurance. We also get audited annually by the OLA and the OSA, and then also USDOL audits through the OIG audits us periodically. Generally, Minnesota exceeds USDOL standards, and we're typically the most cost-effective UI program in the country. One of the significant areas that is a part of the review process is what's called the Benefit Accuracy Measure program. All state UI programs do this. And essentially what it is it pulls a random sample of individuals that have been paid and then reassesses that week of payment to ensure that the payment was accurate and done correctly. Generally, it's a challenge area for a lot of states. Minnesota has one of the lower error rates in the country, and our fraud rate hovers around about 1.5%. So that's unemployment insurance fraud. That's typically not a criminal level of fraud.
Got a question. Senator Draheim.
Thank you. Thank you, Director, for the information so far. I believe last year we were at 1.7. And did we drop to 1.5 from last year to this year?
Yep.
Chair, thank you.
I'm sorry, Deputy Commissioner Rowe.
Mr. Chair, thanks for the question, Senator Draheim. Yeah, so USDOL, so this BAM benefit accuracy measure and kind of the review process, they do this every year with the unemployment insurance data. So yeah, this is updated for I think the most recent year of data. I can't remember if it's the single year or if it's a 3-year rolling look back, but yeah, we did actually improve program improved in performance over the past year.
Senator Draheim.
Thank you, Chair. And when we were talking last year, I think there was another category besides fraud that was like missed payments, or maybe you could explain it, Chair, if that's okay.
Yes.
Yeah, thank you, Mr. Chair, and thank you, Senator Draheim. Yeah, so there's also, it's called by the Department of Labor improper payments. So those are payments where it's not tied to fraud, but where upon this, again, very thoroughgoing review that happens on a sample of cases, it is found that for one reason or another, the payment that was sent, the amount of the payment was not what it would have been had you had perfect information at the time of the payment, right? What we found, I think, going back to the data there, like 90% of the of improper payments are generally attributable to an applicant's error in the application, right? They're not errors made by the program per se. It's generally it's somebody forgetting to report a wage, right? Inadvertently, it's somebody forgetting to report work. It's somebody having some sort of issue that might that would have led them to that would have led you to calculate the difference differently. But again, it's not fraud. It's it's an honest mistake. And again, I think part of the reason the feds go through this very thoroughgoing review, the objective on improper payments isn't from the federal standard. The federal standard is below 10%, which we comfortably meet, and that's because there's a trade-off between speed and the speed of getting something out and that accuracy. If you tried to drive that to zero, you'd spend weeks looking at every single payment. So I think we generally exceed, we've exceeded that standard by the feds, and I think are one of the top performers in the country. They separately look at the fraud rate as another controllable factor.
Senator Draheim.
Thank you.
Anything else?
Yeah, just one more thing, if I could, Chair. So I think last year we had a discussion about one of my constituents that someone stole his identity, and it took 2 checks to be stolen, I guess, before he noticed someone was claiming to be him and collecting unemployment and getting the money directed into someone else's bank account. And the person that he talked to when he called to report it said that he was lucky that he caught it with only 2 checks being cashed. And the person on the phone told him that it was an average of 5 checks on average before it's caught. Do you track the timeliness of something like that? Are we doing better or are we doing worse? And then the second part of that question would be, under that example, does that go under the 1.5% for fraud rate, or is that the improper payment? I assume it's the first.
Deputy Commissioner Rowe or Mr. Hickman?
I'll maybe offer just a couple quick thoughts, and I'll ask Director Hegman just to add a couple points there. I would say just in general, in terms of constantly working to improve program integrity. One of the, identity theft is an unfortunate thing that happens, right? It's a fact of our society, right? That all programs need to develop defenses and work to minimize as much as possible, right? So, I think one of the items that Director Hegman noted was, continued work on, strengthening password requirements, right? And things like that. And additionally, the program is currently laying the groundwork to be able to move to the new login amend service in time as that service deploys to more Minnesota areas. So I think that is kind of and one form of controls is there's not just one form of controls, and the UI program has a number of controls in that regard to prevent those issues from happening. To your very narrow second question, again, the DOL metrics are based on a random sample, but that would, if somebody's identity was stolen, that would count as fraud under that metric. I'll maybe ask Director Hegman to chime in just on some more of the programmatic specifics to further to your question.
Director Hegman.
Mr. Chair, Senator Draheim. Little difficult. The narrative is undoubtedly what the constituent heard. Most of our staff that would answer the phone wouldn't have any access to that kind of information, so I'm not quite sure what they were talking about, to be honest with you. Normally, if somebody were redirecting someone's payment, we would detect and stop that before the payment left the building, so to speak. So I'm not quite sure of that scenario, but we watch every single request for benefits, and we watch every single banking transaction that takes place, and we have tools available to us to intervene if something has been changed, that review and then intervene if something's been changed that shouldn't have been changed. So it's possible that something else happened, but typically we would not see that happen.
Senator Draheim, and once you all give an answer, can you keep your voice up, because it tapers off and it comes up and it tapers off again, and that's kind of hard to hear and track. Senator Draheim.
Thank you, Chair, and thank you, Director. So, I guess a couple thoughts that popped in with the 1.5% dropping from 1.7 is the fund bigger? That's why the number's smaller. And are we consistent on the dollars lost due to fraud from last year? Because last year was about $1 billion fund, if I remember right. And if it was 1.7%, that'd be $17 million. Director, I know you're the numbers guy. So if I'm thinking about that right, and if you're catching them that quick, where is the fraud happening? What can we do to help to continue the right direction that you guys are on shrinking that?
Director Hegman.
Mr. Chair, Senator Draheim, thank you. Most of the number of the 1.5%, that's actually unreported earnings is what most of that's going to be. So that's that kind of fraud. The separate type of fraud, which we usually call imposters or hijackers. Imposters we define as an individual who is not who they assert that they are and attempt to file for and receive unemployment benefits at the initial application process, pretending to be someone else. A hijacker would be somebody who attempts to go into an existing unemployment account and then redirect the funds from that account to themselves. That number is, while those would all be fraud, those numbers are incredibly low most of the time. And even during the pandemic, they were very low. I don't have them in front of me right now, but that event is actually, we're relatively good at stopping that. The 1.5% that you're seeing is primarily not going to be that kind of thing because that money doesn't leave for the most part. It's going to be the unreported earnings. Sometimes it's a separation from employment, a quit or a discharge that about which the individual dissembled. So that would be where the 1.5% comes from. The other form of it, the imposters and hijackers, is diminishing low most of the time. It is possible, and it was quite a bit more common. The attempts were quite a bit more common, to be clear, during the pandemic. A lot of states struggled with that. That's why the numbers are so high across the country. In those states, what they did was they shut down most of their controls during the pandemic. And because the new programs came in and they didn't have the capacity to handle things, because we scale well, we shut down none of our controls during the pandemic. So everything we did in 2019, we were able to do in 2020 and 2021, plus we added to that in order to do a better job detecting and stopping imposters. The other states just weren't as well situated for that, and their numbers went very high. That's imposters and hijackers. This number is primarily looking at the unreported earnings. I did look a while ago, and an imposter or hijacker would show up in the data set for the benefit accuracy measurements. And in fact, I don't think we've actually had one statistically show up in that population for a couple of years anyways. So it's not that it doesn't happen, it's that we stop them before they get anywhere near a payment process. Obviously not perfectly, but we do pretty well.
Thank
Senator
you.
Draheim, any follow-up?
No, I'm good.
All
Thank
right,
you.
you can continue with your presentation.
Back in January, we got a visit from our friends at the United States Department of Labor. We found with some satisfaction that they were here. None of them are from this far north, and they were all here during the cold week we had in January. So that was something for them to get used to. They came to do a review. This got kind of announced in the media as a strike force. It was not really a strike force. They came to do the same review that they normally do with us periodically. They just hadn't done one for a few years. So they reviewed our eligibility determinations. They looked for the processes we use for detecting and preventing imposter fraud, hijacking schemes, verifying work authorization, and detecting and remediating unreported earnings, and so forth. So far, we don't have our final report from them, but so far we're not seeing that there'll be any findings out of that review. We also get reviewed and are in regular conversation with the USDOL Office of Inspector General, and they come through and review our work periodically. Usually what we get is very positive comments from them and appreciative that we're able to participate and provide data and support to them in the work that they're doing. So that's, they're so far what they've said narratively anyways is that our approach is noticeably more effective than other states. I'm not sure why. I have a blank slide on mine.
It builds.
What's that?
It's building.
Oh, okay. We were reviewed by the Office of the Legislative Auditor in 22 to look at, essentially they were focused on the imposter and hijacker work, and their findings were positive on those things. There's a couple of things that they asked us to work on that we have been working on since then, but generally a good and positive finding from that work as well. Continuing to improve our tools. We also reviewed it. This is sort of deeper levels of integrity, but we actually have a physical review by the Internal Revenue Service. Every couple of years, they come out and make sure all the doors are locked and everything is securely stored away, and check to see what staff can and cannot see. So the process as a whole already has a lot of controls inside of it. The fact that employers are involved in unemployment insurance ensures that we have a degree of integrity and control. Everything is appealable, everything is reviewable. Employers can and do report fraud when they see it. There's random audit of cases that we do. There are some administrative penalties and criminal penalties when those come up. So very quick review. I've got a little bit more data here, but what we're seeing right now is 25 looked a lot like 24, so the patterns are kind of overlapping. You saw that in the previous graphs that I showed you. That's sort of, it's good and bad. The nice thing about it for us is when the patterns repeat, then we can sort of predict what's going to happen next. When the patterns are in the process of changing, it becomes a lot more complicated to predict what's going to happen next. We did implement an additional benefits program for iron miners back in June. We're continuing to conduct employer audits, so that was closed down by all states during the pandemic. We're back up to 1,400 of those a year. We turned 90, as I mentioned before, in August 14th, I believe, and we had cake and we went back to work. There was a federal government shutdown. About 800 employees applied for benefits back in October. 24-25 has been more, or 25-26 has been more or less like 24-25 in terms of claims activities. But we did have a little bit more activity as employers are trying to come into compliance with the paid leave law. We continue to expand, so there's a program that we operate called the Reemployment Assistance Program. RESEA is the acronym for that. And what that does is helps folks that are not attached to their last employer establish they do an assessment, they do a reemployment plan, and then we talk to them and try to make sure that they're taking action to help them get back to work. So it was about 45,000 in 24, about 55,000 last year. We'll be heading towards about 60,000 folks this year. So our goal is to try to touch base with as many folks as possible to make sure they get the services they need to return to work as quickly as they possibly can.
All right, any questions from the committee? Any questions? Senator Pratt.
Thank you, Mr. Chair. I have several, so if anybody wants to jump in between, they're more than welcome. You mentioned imposters and hijackers. Can you define what those terms mean?
Director Hegman.
Mr. Chair, Senator Pratt, we try to be fairly precise about both of those because the broad term fraud just encompasses too many things. For us, an imposter is only somebody filing what I'm going to call a brand new claim, a brand new claim, never done before. That SSN's never been used before. That's what we would call an imposter. It's a new instance of the SSN, and the data coming before us, we review those. So that's what we would call an imposter. A hijacker is somebody that has somehow gotten the password of somebody that already exists in our system someplace. Sometimes those people filed claims 10 years ago, and we still have data. That would be a hijacker. So a hijacker is somebody coming in to try to take over an existing account someplace. It could be one that's active. It could be one that was from 10 years ago. I'm sorry, we distinguish the two because the way we detect them and what we do to deal with them is different.
Senator Pratt.
Thank you, Mr. Chair. And that sounds very familiar to the fraud that I used to track. I would have called them imposter, account fraud and a hijacker takeover. And we saw that in the credit card space quite often. Are there any other types of fraud that you track and classify?
Mr. Hickman.
Mr. Chair, Senator Pratt, there are other manners in which somebody might be able to do that, as Deputy Commissioner Rowe mentioned. The intentional non-reporting of wages, basically saying you're not working when you are in fact working. That would be the primary source of that kind of fraud in the unemployment insurance program here and in other states. There are narrower segments that occur occasionally. We have, I would call those more attempted fraud. There are scenarios where someone who is not an employer registers an employer account and then creates employees that supposedly worked for them, and then they use dummy SSNs or whatever they're using. So they create an employer account, essentially creating a fake business and then try to file for unemployment benefits using those records. That is a form of fraud. Those are actually, in our system, very easily detectable. I know other states struggle with that, but that would be probably the primary one. It is notably unsuccessful, so we don't talk about it very much. It's if you and you know this field well, it's a lot of setup to make that work, and by the time they get to the end state of it, we can easily detect it and stop it before it goes anyplace.
Senator Pratt.
Thank you, Mr. Chair. And oftentimes we use the term, you use the term overpayments. Is there a difference between overpayments and fraud?
Mr. Hickman.
Mr. Chair, Senator Pratt, an overpayment can occur for a number of different reasons that has nothing to do with fraud. Most overpayments occur without any reflection on fraud whatsoever. For instance, if we're running multiple programs, if we're doing extended benefits programs, sometimes the rules for those programs will change. And somebody might have to move from regular unemployment insurance to an extended benefits, and then maybe we have to reverse that because the rule has changed again. From an accounting standpoint, we would call those overpayments because we have to rebalance each one of those 100 different accounts that I described earlier. So those will create overpayments. They're technical overpayments. Nobody's done anything wrong. Occasionally, an applicant will call us and say, I worked last week. Can you correct my weekly request? We will do that. They will be overpaid for that week. It'll inflate the balance in their account, and then they will return the overpayment in subsequent weeks that are requested. So there's a lot of overpayments that never result in anything even close to fraud. They're just technical, or they're errors that need to get picked up and corrected, occasionally appeal reversals.
Senator Pratt.
Thank you, Mr. Chair. Can you tell me how much what percentage, how much you collect in overpayments? And how aggressively are you going after those overpayments?
Mr. Hickman.
Mr. Chair, Senator Pratt, the majority of overpayments that are, particularly the non-fraud ones, are collected through offset from future benefits that are owed. So that works reasonably well most of the time. I'm sorry, I don't have the numbers right now. Fraud overpayments and the larger ones, we have a number of tools that are available to us, and then it's a question of sort of aggressively chasing those down. We have the ability to do revenue recapture. We can capture part of a tax refund from the IRS as well. Those are complicated processes, as you can imagine, to intervene in those things. We can also do garnishment, technically liens and levies if we can find the money someplace. Turning all of those on, the key to that is that you need to know that the debt is very, very sound. And so we need to know that this is the right person, typically it is, and we need to make sure that they've been communicated with well. So that's sort of the challenge around, say, the rev recap and the IRS rules for those. Otherwise, yeah, it is a bit tougher, to be honest with you, for those that are related to what we'll call the fraud overpayments.
Senator Pratt.
Well, thank you, Mr. Chair. And the reason I asked was I heard out of one of the recent UI committees that there was a question around this and a potential bill coming forward that the department seemed to indicate to the participants of the UI committee that they weren't doing a very aggressive job in collection. When you find, let me ask this: how do you detect your fraud? I mean, how do those cases come to you? How do you identify them as fraud?
Mr. Hickman.
Mr. Chair, Senator Pratt, the strongest detection that we have is a comparison of the weeks requested to the wage detail files that we get from employers. So it's typically got a delay behind it. To be clear, most people are telling the truth most of the time, so it's a relatively low number. But the strongest collection, or the strongest detection tool we have for unreported earnings is always going to be wage detail. It's the strongest, most accurate data that we have. There's other sources, but they tend to not be quite as accurate as wage detail. So that would be the strongest detection tool we have.
Senator Pratt.
Thank you, Mr. Hickman and Mr. Chair. I would disagree with that statement. I think the data that we've seen out of DHS, the data that we saw out of the OLA report on deed last year would suggest that there are a fair number of people that aren't honestly telling you what the right data is. what, are you proactively finding the fraud, or is most of it being referred to you by employers or people who have had their identity stolen?
Mr. Hegman.
Mr. Chair, Senator Pratt, so I was referring to the wage detail cross-match, which is about unreported earnings. That's a very particular kind. The identity theft, again, we're not seeing a great deal of that. So unreported earnings is detected through the wage detail cross-match. I'm sorry, we run that ourselves. We have access to the wage detail records, and we run a cross-match on a quarterly basis.
And if I'm
Deputy Commissioner Rowe.
And just to, just Senator Pratt, just to note, right, I think just to note Director Hegman's comments in relation to what you just said. Again, I think if you look at the, significant volumes that we see in terms of the number of people who apply for unemployment insurance, again, the vast majority are telling the truth indeed. That's not to say that we are not actively looking for and catching people who are not telling the truth. But I do think I think it is a true statement to say that the vast majority of people are telling the truth when they are applying. We are not naive. We understand that these are dynamics where we need to have constant vigilance in that regard. But I do think I just wanted to clarify that point. Thank you, Mr. Chair.
Senator Pratt.
Thank you, Mr. Chair. Well, Mr. Rowe, after looking at, I think we can say with some certainty that attestation is not a very good fraud control. And unfortunately, we've relied on that in far too many of our agencies, including Health and Human Services and even your committee, as we saw last year in the OLA report. But I want to get back to asking about fraud. So, Mr. Hegman, what you're saying is most of the fraud that you detect, you have programs in place that you're proactively detecting this fraud. You're not relying on someone to call in and report it.
Mr. Hegman, to the question.
I just wanted to clarify that, Mr. Chair.
Mr. Hegman, again.
Mr. Chair, Senator Pratt, that is correct that we don't merely wait for reports.
Senator Pratt.
Thank you, Mr. Chair. And is it true that someone has to be actively seeking work in order to qualify for unemployment benefits?
Mr. Hegman, I know you covered that earlier. But
I'm sorry, Mr. Chair, I had to step out for a little bit.
Mr. Hegman.
Mr. Chair, Senator Pratt, it is true that in order to be eligible for benefits, you must be able, available, and actively seeking work.
Senator Pratt.
Thank you, Mr. Chair. I've been hearing it from a number of employers about a phenomenon called ghosting, where people are claiming to go to interviews and they're not. How are you identifying ghosting in your payment of benefits, and do you proactively seek out that ghosting activity?
Mr. Hegman.
Mr. Chair, Senator Pratt, I have heard the same thing. I frankly don't well understand the assertion behind it. I understand the terminology. I don't well understand the assertion, and I'm trying to understand how we would be able to detect in our data or any place else an activity that was entirely outside of the program. If two individuals are interacting with each other and one fails to communicate to the second one in the way that the first one expected, or the second one expected, I don't know how we would check that. We would hope that an employer would report to us that somebody had been scheduled for an interview and didn't show up. We get that occasionally too. I have looked into that. We had a report of that in a particular part of the state, and this was a large report. This was happening all the time. When I looked at the data, there we had I think for that area of the state, about 15 people that were unattached to their last job and would have been looking for work, and we couldn't see anything for that. So I'd be glad to look into it, to be honest with you, because it seems like an interesting phenomenon, but I've yet to see much substance yet. But if there is something there, we'd be more than happy to look into it.
Senator Pratt.
Thank you, Mr. Chair. So it's fair to say that you're not, that when somebody claims that they've gone to an interview, you're just taking it upon attestation.
Mr. Hegman.
Mr. Chair, Senator Pratt, generally speaking, that would be true if that was asserted.
Senator
you.
Pratt.
Thank you, Mr. Chair. And we talked a little bit about how much was collected. I didn't really get a good rate or sense of what that was in overpayments, and how much do you write off?
Mr. Hegman.
I don't think we have that on us, but we can follow up.
Mr. Chair, Senator Pratt, I don't have that data with me right now. I'm sorry.
Thank you.
Senator Pratt, is that some
Mr. Chair, I'm
information that you
going
can
to
share?
take a break here, but, I just want to say, I'm still concerned with what we're seeing in all the agencies relying on attestation. Attestation is not an effective fraud control. Attestation is not verification. We don't, as we've heard here today, even whether somebody is living up to the rules of the program, we're taking them at their word. We heard the governor in December say that we were going to rely on the good nature of Minnesotans on paid family medical leave. Well, we know that they're going to steal from us. There's a segment of the population that is, bad people are going to lie. They're going to lie about their attestation, and we have to be better at doing that verification. And whether it's the frontline worker pay, whether it's unemployment, whether it's the OLA report on grants last year, we can't rely on attestation. We need to expect better from our agencies. And I expect our agencies to come back with more detailed fraud plans on how they're going to protect not only the taxpayer dollars from fraud, but to make sure that the money are going to the people that need and deserve it and that it is intended for. Thank you.
Thank you, Senator Pratt. Any other questions from the testifiers? Senator Draheim.
Thank you, Chair, and thank you both for the testimony. Just a couple of things to kind of wrap up some of the topics that you've covered on. The federal Dolly report that's coming at Department of Labor report, when do you think that'll be available to the public?
Mr. Hegman or Deputy Commissioner Rowe?
I can, Mr. Chair. What we expect is there will be just a letter sent to the department with any findings, which again we don't anticipate. Certainly, once that comes, we don't have a date on that from our friends of the federal government. But once we have it available, can certainly make you aware.
Senator Draheim.
Thank you. That would be wonderful. And then we've talked a little bit or danced around the paid family medical leave. What are the steps being taken to really separate to make sure that they can't do both? I know you mirrored the software kind of and modified it. Just if you could get a quick answer on how we're ensuring they're not doing both at the same time.
Deputy Commissioner Rowe.
Thank you, Mr. Chair. Very, very briefly, there's an interchange of data between the two programs that runs regularly to ensure that you don't have people with the same with the same identifications.
Senator Draheim.
Thank you, Deputy Commissioner. And then just change the tone a little bit if we could. We had a wonderful hearing the other day on AI. And I know there's a lot of talk about AI. I view it as a tool and not a threat per se. But when I look at the number of, I don't know what the right nomenclature is for you guys, but the closings or of entities in Minnesota last year, it's more than I thought it would have been. And I think the numbers in the 300 and some thousand people you serve every year, if I'm correct there. But I think we had 26,000 people lose their job due to closings of entities or moving out of state. First off, is that 26,000 number consistent or normal or normal-ish? And then what are you planning with AI? Do you think it'll have any impact? It is the hot topic of the hour, but I'd like to get your perspective, both of you. Thank you.
Deputy Commissioner Rowe, we'll start with you, and then we'll go to Mr. Hegman to the question.
Thank you, Mr. Chair, and thank you, Mr. Chair and Senator Draheim. And yes, it is a hot topic, and I think there are probably many people much more qualified than me to talk about it. But since you asked, I think as far as establishment closures, I'd probably want to check with our labor market information team, since they're they have the stronger handle on the on the kind of pulse of business openings and closings. Obviously, I mean, I think we've actually genuinely seen some really good tailwinds even just yesterday with what was it? The Pivot, the Pivot Bio announcement. There's definitely some very good things happening that I think are worth noting. I do think, and the national data backs it up, that there does seem to be more churn in the labor market overall, right? And what is that attributable to AI? Is it attributable to other structural changes happening in the economy? I think the jury's still a bit out on that, right? I think, there certainly have been some notable, kind of notable milestones. I think the company formerly known as Square making announcements around reducing their workforce in that regard. But I think what you see in the conversation is I think some folks think this is going to be a huge problem for workforce. I think others see it as augmenting existing jobs and increasing productivity, and more extreme examples of both of those. I don't profess to have that crystal ball. I wish I did. I think when it comes to I do think that there are things within the purview of this committee and the conversations that we've had this session and even in the last session where, this is a tool, it does provide a set of tools that, offer greater efficiencies, but also create risks, and finding ways to ensure that Minnesota's workforce going forward has the ability to use these tools and thrive. I imagine all of you are exploring these tools just in your own personal capacity, and I think that's something that that Minnesotans, as we look forward to our future, again, we certainly want to be in the best position to take the good and leave the bad behind. But I don't know if I went anywhere with that answer, Senator. But I genuinely think there's a lot of. There are many questions. There's a lot of opportunity. There certainly are risks. We kind of have to keep all in mind.
Mr. Hickman, do you have anything to add to the question, or?
Thank you, Mr. Chair. Just a very brief item. We're always interested in improving our technology and improving our approach to doing things. I think the observation I would have is that it appears to offer a lot of promise, but at the same time, if you don't understand what you're buying and you're just looking for an easy solution to a big and complicated problem, I think there's a lot of risk there. And so we're being very careful to understand what this can and can't do for us and to make sure that we serve the people of Minnesota well by implementing it in a smart way and not just sort of chasing after the latest thing, and promise you that we're doing that.
Any other questions? Senator Draheim.
I promise, Chair, I'll be done after this one. Just the last couple years, we've had bills to address the mining layoffs and the mining or mine closing, et cetera. Are you aware, I think there's one more mine that might close, way it sounded up north. Are you as aware of anything there, or is there anything that we should have on our radar as we continue on this session? Thank you.
Deputy Commissioner Rowe.
Mr. Chair, Senator Draheim, the only one that I'm specifically aware of, there is a bill working its way through the House that I think is seeking to address some additional layoffs that occurred. I want to say, was it HIBTAC? Yeah, at HIBTAC, that I think occurred that occurred basically since the beginning of the year. I'm unaware of any other pending pieces, but we're certainly working with authors as appropriate there.
Any other questions before we go to our next bill? Seeing none, thank you so much, Deputy Commissioner Rowe. Thank you so much, Director Hedman. We appreciate your discussion and presentation on unemployment insurance. Thank you so much.
Thank you much, Mr. Chair.
All right, I'll now ask Senator Draheim if you would approach the testifiers table. Members, we're going to review Senate File Number 3649 that is before us. And I think, Senator Draheim, you also have Stephanie Ullman.
Yep.
If she would join you at the table, that would be great. Senator Draheim, as soon as you're ready and prepared, please go ahead. And Ms. Ullman, when you testify, you will state your name for the record, and you have then 2 minutes of testimony. Senator Draheim.
Thank you, Chair, and thanks for hearing this fix-it bill right away this session. I do appreciate it. Last year, with your help, Chair, that we funded some money to the Rural Cancer Institute so we could kind of upscale training in that field. And we had a couple little hiccups on the bill, and I know we're limited on time, so I think I'll just go right to Stephanie to talk about what we're asking for, what little correction is.
Ms. Oman, you can go forward, identify yourself for the record and who you represent.
Good afternoon, Chair and members. My name is Stephanie Oman with the Rural Cancer Institute. I'm here to offer testimony on behalf of Dr. Wade Swenson, the founder of the Rural Cancer Institute and current practicing rural oncologist. His testimony is as follows. Last session, the legislature made a meaningful investment in the rural oncology workforce development by funding the CORE program, the Clinical Oncology Rural Experience. The pilot program will be based out of Lakewood Health System in Staples, Minnesota. CORE places medical oncology fellows, residents, medical students, and advanced practice students directly in rural oncology practices, giving them firsthand experience in communities that need them most. It's modeled after the University of Minnesota's RPAP program, which has decades of evidence showing the rural exposure leads to rural practice. Today, I'm asking for your support on Senate File 3649. It's a simple but important technical fix. Currently, CORE is limited to the participation of trainees who are residents of the state of Minnesota. The problem? Many physicians who end up practicing in Minnesota complete their training in neighboring states or train in Minnesota with plans to return to their home states. All three of the oncologists in Lakewood Health System are perfect examples, each trained in adjacent states and chose to build their careers here in Minnesota. With only 2 oncology fellowship programs in the state of Minnesota, the need to widen the pipeline of cancer care providers is critical and urgent. This bill puts CORE in its intended form while still prioritizing Minnesotans, allowing trainees when recommended by a practicing Minnesota oncologist. The need for cancer care in rural Minnesota is urgent, and the workforce available to deliver that care is limited. I urge you to support this small technical fix and support Senate File 3649.
Thank you so much. Any questions? I do have a question. Last year, we made this available for students and practitioners here in our state. And the committee talked a lot about, at least as I recall it, not wanting it to be available for others outside our state, because the whole idea is for people to remain in our state, be in our state, get the benefit of our tax dollars. So tell me why we should do this.
Thank you.
Senator Draheim.
Thank you, Chair. And, you know, I think when you look at the capacity of doctors that are coming out of Minnesota are very limited. You know, we've had a lot of discussion the 10 years I've been here, a couple of years on the Health and Human Service Committee. We are not producing enough doctors. A lot of the doctors we have are older, and they are retiring. The challenges of rural Minnesota in retaining and attracting young doctors is very, very, very difficult. We have less programs. We have clinics and hospitals closing all over the state, and those that are left are having a hard time finding doctors, period. So the pool for the I call it 1/3 of the program, which would be the doctor program, part of it, isn't finding people here in Minnesota to fill the pipeline. So we need to go to the outside, or the surrounding states is kind of the goal, where if you can't get into medical school at the U, where are you going to go? You're going to have to go outside of Minnesota. So that's how I interpret this, Chair, and I'll ask the testifier if she has anything to add.
Ms. Oman?
If you look at the 2 fellowships that exist in the state of Minnesota, the University of Minnesota only has 3 oncology fellows per year. With 100% participation of those 3 oncology fellowships, that doesn't fill the pipeline that we need to provide cancer care and this specialized care out in rural Minnesota.
And if I could add, Chair.
Senator Draheim?
Thank you. I think everybody here has been affected or know a family member that struggled with cancer. And when you're doing chemo or some other treatment, you can't travel. And in my area, there's been a lot of hospitals closed. I mean, we have to bring medicine to these people. They don't have the strength to drive a couple hours to a hospital. So we need more doctors in the rural areas. This is the best way I have seen to try to do that. And it's a tailored program at a very narrow field that we have a huge need for.
Any other questions from the committee? Seeing none, we're going to lay Senate File Number 3649 on the table for possible inclusion.
Thank you.
Thank you. Members, that is it for today. I will remind you that we are going to have our meeting on Monday, and our business will be now listening to a number of bills because we know that the first and second deadline is March 27th. So we want to make sure any and all bills that are going to be considered must be done expeditiously, okay? And so it'd be helpful because we're not just having presentations where it doesn't require quorum. If we can work hard at getting here on time, because we're having members get here an hour late, and I know that there's different things going on because it's that busy time of the year, but if you work really hard in order to be here, because we really need to take care of our business and make sure you're here so you can chime in on the conversation. All right? Any other questions or concerns? Senator Herb.
Thank you, Chair Champion. I just want to inquire about the status and when the economic dollars for the impact of ICE that we'll be working on. Approximately, what's the time range for that?
So just so you know that we've been working on it, we've also had to meet with the finance folks in order to try to get a better sense and get questions answered about where certain accounts are, because we're trying to figure that out. So real soon here. So just be here and we'll make sure that we announce it so everyone can be involved in it, and we'll make sure that we get the draft to you expeditiously. Thank you for the inquiry. Any other questions from the committee? Seeing none, with that being said, the meeting is adjourned and I will see you on Monday.